Hello and welcome to the weekly wrap. So this week has been quite a bit of a busier one than last week. So there's been two main things this week. So firstly, we had the surprise decision by the Russian central bank to hike their key interest rates by 650 basis points. So that now stands at 17%. So typically when a central bank does hike their rates, we would expect to see the domestic currency appreciate. However, this was not actually the case despite the drastic action by the Russian central bank. So instead we did actually see the Russian ruble print record lows against the US dollar. So this was largely as a result of investors remaining relatively sceptical over whether the action taken by the Russian central bank would be enough to counteract the problems facing the Russian economy, notably those stemming from the ongoing crisis with Ukraine and the continued slide in oil prices, which are particularly harmful for the Russian economy. So, however, we did see somewhat of a stabilisation throughout the rest of the week in Russian asset classes as we do head into the close. But looking forwards, one thing is just to think about is how the Russian central bank and the Russian finance ministry plan to tackle the problems, and particularly in the context of potential further sanctions to be imposed by the West. So that'll be something to keep an eye out for. So secondly, from a central bank perspective, of course, all focus this week was on that FOMC policy announcement. So all the focus was on will they, won't they, with the considerable time phrase, and will they replace it with the word patient. However, upon the release there was a lot of confusion, as although it wasn't in its original place, the considerable time phrase, they actually just moved it within the statement, but they did say it's consistent with previous guidance, and they did also introduce the word patient. So markets took this as a relatively dovish signal, with the median end 2015 rate outlook falling to 1.125%, so that was from 1.375%. However, nonetheless, there were some relatively hawkish tones of the accompanying press conference, so some investors suggested that Yellen actually left the door open to a potential rate hike in as early as April next year. But I'd say normalisation isn't going to happen for another couple of minutes, or at least meetings rather, or at least not going to be discussed for another couple of meetings. And when questioned on the use of the words couple, she said two. So it does potentially leave the door open to an earlier than expected rate hike, but nonetheless it was taken as a relatively overall dovish report. And then following that, we did see US equities spike throughout the week. The Dow Jones Industrial Average, that was actually up almost as much as 400 points at one stage, with the S&P 500 seeing its largest gain since June 2013. This very much dictated the state of play for European guys as well for the remainder of the week. So European equities, they also soared, although we did see equities come off some of these highs heading into the week, and the US dollar very much dictated the state of play in FX markets as well, following the FOMC. But do note that looking ahead next week, of course, we do have the beginning of the festive period, and so volumes will begin to tail off, as we have seen throughout today's trade, which has been particularly quiet. But that's all from me, and I hope everyone has a fantastic weekend.